We're here today with Ted Baker's CEO Rachel Osborne and CFO David Wolffe to discuss their 2021 interim results. Rachel, what are the key highlights for Ted's first half?
Well, what a year. COVID-19 is an extraordinary black swan event. It's unlike anything we've had to navigate before, and clearly it's had a material negative impact on our financials. Throughout this time, we've been focusing on being connected to our customer and ensuring all our colleagues are safe. So firstly, I'm pleased to say that whilst Ted wasn't well positioned going into COVID, we have made some major progress already on fixing our foundations. We've hired some great leaders into key positions. Peter Collier as our Chief People Officer, Jennifer Roebuck as our Chief Customer Officer, Ari Hoffman as our first Chief Exec North America, David Wolffe as our CFO, Anthony Cuthbertson as our Global Creative Director, and Helen Costello, our Group Commercial and Business Development Director. We've also completed a full operational and efficiency review to focus on what we needed to change. We've recapitalised the business, so we have been busy with great support from all our stakeholders. We sold our headquarters, we raised 100 million of new equity, and we've agreed new banking facilities. And all of this culminated in the launch of our transformation plan that we're calling Ted's Growth Formula, which is all about making Ted Baker more profitable, more cash generative, and driving higher return on capital employed. And the focus of the plan is around three key themes: refreshing and re-energising our brand and product, our digital and asset-light growth, and a significant cost-out programme. And we're executing well against this. However, the COVID headwinds have been tough for us, and it's amplified some of our legacy issues and heavily impacted our city centre and travel store performance due to the government restrictions. Having said that, I'm very pleased with our e-com performance, and our brand is in good health.
And David, what are the key financial highlights?
Well, COVID has obviously had a huge effect with all of the enforced store closures in the UK, US and rest of the world. So when you look at the headline financials, they don't really show the progress we're making. However, our online business has performed strongly through the period, and e-commerce revenues overall are up 42% on last year, which we know compares well to our peer group, and our own website performed even better than that. On costs, we've made excellent progress in addressing our cost base, and the savings targets that we set at the time of the equity raise in overheads and staff costs have all been exceeded, especially in the area of store payroll. In property, we've closed a number of loss-making stores. We've notched up £6 million of negotiated rent savings already, and we're continuing to negotiate with landlords on doing more commercial deals, and there'll be more on this to follow in the future. Lastly, cash performance is a key highlight of these results. We've taken a tight grip of costs and cash, and despite COVID, we've generated positive free cash flow of around £20 million, which leaves us at the end of half one with net cash of £61 million.
And what's the outlook for the rest of the year?
Well, like most public companies in this extraordinary time, we're not giving guidance for this financial year due to the extreme uncertainty around COVID. And as we look into next year, Brexit only adds to that uncertainty. And the legacy issues that Rachel spoke about, like the shape of the estate, we believe will remain a lag during FY22. However, all of the great work we're doing on cost control and cash management will continue and will bear more fruit. We would expect to see our cash position build further during the balance of this financial year. As a result, we are upgrading guidance on one of our 3-year financial targets of reducing the net debt to EBITDA ratio to below 1 times by FY23, and we're bringing that forward by 1 year to FY22.
Rachel, can you give us an update on the strategic progress you've made since launching Ted's Growth Formula?
Of course. As I said, we've dealt with the urgent issues and our foundations are fixed. And while it has been a challenging half year, we're confident in the plan and the delivery of the plan. And we've been really busy. The business has been very dynamic and we're making real progress on all our key initiatives. We're delivering against the 5 operational KPIs we set for ourselves. And so, against the 3 key pillars of TED's growth formula, let me just take you through some of the progress that we've made. So, on the brand and product refresh and reionization, we've hired a new chief creative. We're designing against the new product pyramid that we introduced earlier in the year that Ted Baker hasn't done before, which is pretty much fashion industry standard, so moving towards that. Our current season has gone deeper and wider on casual and accessories, so for example, loungewear, jogs and sweats. We've got more entry price point weighting and new higher range items. And we've launched a capsule collection called Made in Britain, which is at the top end of the pyramid, which is casual, versatile and fashion-led. We've changed the way we source product to get shorter lead times, created open to buy and looking at consolidating our supply base. And customers are going to start seeing more change in direction in stores from spring, summer 21. Just as a reminder, product in our industry for us takes quite long lead times. So all the busy work is in the pipeline and will start to show from SS21, but with more emphasis and volume in AW21. We've also made good progress with our ESG brand, Fashioning a Better Future. We kicked this off a year ago with a focus on sustainability, and we've made good progress against our targets. This year, we've broadened it into a fuller ESG programme in line with the World Economic Forum framework. That simplifies the world of ESG into 3 key pillars, and we'll give a full update on progress against these at the full year results next spring. Digital and asset-light progress. So we've done a lot on digital. We've virtually been a digital company for quite a lot of the COVID duration. And so we've been really agile in this space. We've introduced store appointment bookings, which allows a customer to book an in-store physical appointment, but online. We've also introduced social sign-in at checkout, which means that customers can use their Facebook sign-in rather than putting all of their details in at the point of checkout. So that just makes it a lot easier and more convenient for those customers that like to pay that way. We've also introduced alternative payment methods like Google Pay, Apple Pay and Klarna. Again, quite a large uptake of these as customers really prefer these methods of payments to some of the more traditional credit card payments. We've also introduced virtual appointment booking in the US. That's where a customer can book an appointment and without leaving their own home, have a virtual interaction with a store colleague in our stores. Most latterly, live chat and text is also now available both in the US and the UK. And this is where customers can get immediate access online to our store teams for advice, product advice, and also they can see the product in real life by interacting with one of our store colleagues real time. We're really pleased that our e-com performance and customer growth is strong. Our customer growth is up almost 100% over this period of time. Also, on asset light progress, we've signed 2 new product license deals. This is where we have experts manufacture different categories for us. They then sell and distribute those, and we take a license fee or a royalty income off those sales. The 2 deals that we've signed in the year are Next, where we have moved lingerie and women's nightwear to them, and Baird, where we've moved Ted Baker formal wear to them who are experts in that formal wear field. We've also got franchise partners internationally who are also continuing to open stores on our behalf. So again, using other people's capital to grow our brand internationally. And finally, David has already updated you on our better than planned cost out or cost reduction delivery. And we've seen very encouraging progress in our joint venture in China. China has bounced back more quickly than other international markets post-COVID. In Q1, we saw a sales decline of 27% year on year. However, in Q2, they bounced back at plus 31% year on year. And in Q3, we've seen an encouraging 48% growth year on year with our China business. So, in summary, we've made good progress against an extremely difficult backdrop of COVID. We have fixed our foundations, that being our team, a robust balance sheet through an equity raise, selling the HQ and new bank facility. We've done a full review of the business and we've launched our 3-year transformation plan, TED's Growth Formula. We've had a better than planned net cash position, which I'm really pleased about, allowing us to trade through COVID. And we've over-delivered against our cost out plans and delivered a strong e-com performance. So while the current market outlook is extremely uncertain, we believe we've got the right plan and the right people, and the future for Ted Baker is exciting.